Is the tech monopoly starting to break? Today, we are seeing the beginning of a massive rotation in the US stock market. For the first time in quarters, market leadership is shifting from overvalued mega-cap tech giants to undervalued small-cap companies. The Russell 2000 has staged a significant breakout above its 200-day moving average, signaling a potential long-term cycle of outperformance that could last 5 to 10 years.
The technical picture is clear. The Russell 2000 index has broken out above its key 200-day moving average resistance level. This breakout is a major shift in trend, indicating that capital is aggressively rotating into the broader market after years of extreme concentration in just a handful of technology giants.
Why now? Small-cap companies are highly sensitive to interest rate policy. Unlike the cash-rich mega-caps, smaller businesses rely heavily on floating-rate debt to fund their operations. As interest rate cuts from the Federal Reserve approach, the pressure on small-cap debt servicing costs will decline significantly, providing a direct boost to their earnings.
The valuation gap between large and small caps has reached historic extremes. The S&P 500's price-to-sales and price-to-book ratios are trading near all-time highs. Meanwhile, the Russell 2000 remains exceptionally cheap, trading at a steep discount relative to history. This divergence makes small caps highly attractive for value-focused investors.
At the same time, mega-cap margins are facing serious inflation pressure. Apple raised prices for Mac computers by 15 to 20% and iPads by 15 to 25% in its online store this morning. The company is actively passing rising memory and storage component costs directly onto the consumer to preserve its profit margins.
This consumer hardware inflation is driven directly by supply chain bottlenecks. Micron's fiscal third-quarter results reveal that its sequential revenue growth was driven primarily by a 60% surge in chip pricing rather than bit volume growth. Micron is leveraging its immense pricing power, locking in multi-year agreements with customers. This concentration of capital in AI hardware has created unique opportunities elsewhere. Investor Michael Burry is buying deep-value software companies like Adobe and PayPal. This is a classic whale fall thesis. Fundamentally sound businesses are being ignored and beaten down simply because they lack an AI narrative. Even major software leaders are feeling the valuation compression. Microsoft is trading at a decade-low multiple on price-to-operating cash flow and forward PE bases, following a significant technical drawdown from its highs. The market's fear of AI disruption has overshadowed the company's accelerating fundamentals. The underlying fundamentals at Microsoft remain incredibly robust. The company's AI and cloud segments continue to accelerate, with its AI business reaching a $37 billion annual revenue run rate. This represents a triple-digit year-over-year increase, proving that Microsoft is successfully converting capital expenditure into real profit. Under the hood, macro liquidity is tightening in specific areas. The Federal Reserve is pivoting to target speculative excesses at the top of the K-shaped economy. The Fed aims to use year-end bank regulation overhauls to reduce its balance sheet by approximately $2 trillion, focusing on draining mortgage-backed securities. Despite the Fed's tightening efforts, structural fiscal deficits continue to expand. U.S. fiscal deficits are projected to remain in the single digits relative to GDP, exceeding official Treasury targets. These persistent deficits act as a permanent support and North Star for nominal asset price inflation. The combination of mega-cap valuation fatigue, rising supply chain costs, and structural rate cuts is shifting the market landscape. While software leaders like Adobe represent deep value, capital is actively rotating into small caps as institutional managers adjust to this new macro regime. To wrap up today's digest, our watch list is focused on the Russell 2000 breakout, Apple's consumer price hikes, and Micron's pricing bottleneck. Keep a close eye on Michael Burry's software positions and Microsoft's valuation support levels as this market rotation continues to play out.